Alright, let's talk about Google, or technically Alphabet. So that is the parent company. Google is just one of the tickers. They have two tickers actually. So here's a fun contradiction to kick us off. So a judge, literally ruled Google an illegal monopoly, and even the stock is like still sitting like a near all-time high anyways. It is around like $373 a share as of right now. The whole company is worth about 4.5 trillion dollars and actually jumped like 3% yesterday, depending on when you look at it. So if you're new to investing, this is a great one to learn on because Google makes money in a way most of us, I believe, understand already, and we are pretty much using it day to day. So I want to break it down the whole thing, how to make money, what is good right now and what I believe, what could go wrong, and whether the price really makes sense as a whole. And just an FYI, I'm just an IT guy who likes reading numbers, who are into stocks. I'm not a financial advisor. Nothing here is advice. This video is for entertainment and educational purposes only. I'm not a licensed financial advisor, and nothing in this video is financial advice. These are my personal numbers shared just for transparency. Your situation is different from mine. Please make your own decision carefully. So if you only gonna look at one slide, so should be the only one. So this is just a 30-second version. So why should you buy it? So as of right now, it still is 90% of the business. That it does fluctuate, but not really something that is going to change too much as of right now. Their cloud business is growing like crazy, 60% a year, and then they're getting close to like 7 billion. And compared to other AI companies, Google is actually one of the cheaper ones for how fast it is growing. What we should worry about is the government trying to clip its wings. So especially the antitrust stuff. So like Google Chrome is one of them. How they monopolize it, especially with Apple. Again, that's just all news, but in my eyes, that would never really happen given how the lobbying and stuff. So I really, really doubt it. If that really happens, I really doubt it. Uh, the AI chatbots could slowly eat up, instead of just Google it or Yahoo it that people used to do. They're gonna spend on absolutely wild amount of AI this year. So about like 180 billion, which has really paid off, especially with Gemini that used to be known as Bard. So my take on it, I rate it 8 out of 10. It is a buy for me. It is a great business, really has real growth, and it's a very fair price. Also they also have lawsuits, hanging over it. Again, just a clarification, I don't own any Google stocks, but I also do. So I don't think I even own like even one share. So the Google stock I actually own is actually from my Robin account, the meme account that I've been talking about. So I don't actually own too much of Google, but I do know it's a very solid company. It's a great one compared to other stocks that I actually researched too. It's actually a company that I really, really would like to own. I'm thinking of getting like a 2 or 3x version, kind of going off board a little bit, but it's a stock that I really like and the services that I actually do use. I do use most of their services, so I think it's a great company slash product that they make. All right, so what is new in June 2026? So basically this year. So a lot happened, especially with their Gemini slash Bart. They crossed 750 million users, so it's genuinely the most used AI assistant right now. Their cloud business is closing at 70 billion a year, like I mentioned earlier. They just roll out a search engine on the 12th of this month. So it's basically AI that goes back and tracks digest info for you, and they ship a new model, Gemini 3.5. The ones keeping an eye on is the new antitrust about their ad business. The government wants to sell them part of it off. Again, this will happen. And though their stock is near record high, the story right now is AI is working, the business is humming, and the lawyers are just, just being, Washington. So, yeah, so that's how good they're doing right now. And I also, not to mention, also to mention, like they have great products. I'm also using like Google Anti-Gravity. That's also really good, and also Google Studio. They're also great. Again, they didn't come out the month of June, but these are just great products that I've been using recently. So just an FYI. So how Google makes money? So basically, how this company makes money is mostly, it's pretty obvious, it's by ads, especially like Google searching. That's one of the main one that people would think about, which it is true. So Google services is roughly around the money they make is 359 billion, so it's about like 89% of like everything that they make. So it can ranges from YouTube, Google Maps, Gmail, Play Store. They're pretty much paying most of the bills. And YouTube, that's a great acquisition that they made over 20 years ago. It's a great acquisition for how much they pay back then and how much it generates right now. So the next is, Google Cloud. So it's about 43 billion. That's the one that's actually renting out computation power to other individuals, but mostly to business. It is a very small slice of what they have compared to like AWS, Azure, you know, but it is growing still. But 11% is still pretty good. Again, it's good to diversify rather than everything like just Google services. So the other bets that they have, what we're seeing mostly right now, if we're living in the States, driving around, you see Waymo, those autonomous driving vehicles. That's where they're spending most of the money right now. Again, they're not really in Google, but they're mostly in the Alphabet category. But people know Alphabet as Google, so they're kind of like the same thing. But Waymo is kind of like another division, sort of. That's the last time I believe. I could be wrong though. All right, so let's talk about financials. So the revenue, the total sales last year is 403 billion. Their last quarter grew 22%. Their net profit, their net profit is 132 billion. Their EPS is $10.95, and their cloud backlog is through 462 billion. And this is just a very plain version. And again, these numbers really reflect how well the company did, and especially in the pricing that they are at. I remember like especially like a little bit after one a little bit like around like mid April or early May of 2025, it was about like $150 per share, especially with the tariffs thing. But look how much it jumped right now compared to the other, Mag 7 or the Fangs company, right? So they're doing really well. Google right now. All right, so let's talk about, the cash machine. So free cash flow. So Google free cash flow was about 87 billion last year, up from 60 billion a few years back. They used around 70 billion of it to buy back their stocks, so hence why the shares went up. And they're currently sitting about like 107 billion in cash as of right now. And really the flex here is they make so much money that they can hand back like billions of dollars and fund and also put that money into like AI projects, about 180 billion to build out the same thing, and almost nobody can do both, you know, as of right now. All right, so do they pay you? Yes, they actually do now. Well, not now, but recently, I suppose, because a lot of like Max 7 companies, they're starting to pay like dividends, uh, like Facebook that I mentioned before, and now like even Google, but this was back in 2024. I believe Google was first before Facebook. That's what I believe. I believe that the timeline was like that. So it is a very small portion. So given the stock price, they're only paying for like 80 cents per year, but the growth kind of, beat, that dividend cash out, right? So it is a 0.25% yield, 7% ratio, a lot of room for growth, dividend pays straight to you, and you also can turn into DRIP. So dividend reinvestments to increase slightly more shares, and the company does do buyback, so to their own shares. So supply and demand, right? There are gonna be less shares out there, but the growth is gonna go there too, because less shares in the market. And when they do buybacks, and they're also reinvesting, which really means they're also betting themselves. So it's a win-win for everybody. So how rock solid, is it? So they have got about 107 billion cash versus 14 billion debt. Subtract one of them from the other, they're sitting roughly 93 billion in net cash. Their rating is A plus, that's right now. So it's very top, it's better than most countries out there. And their return on equity is basically how efficient their money turned into money is about like 44%. So it is world class. The big picture. So obviously one of them, the ads really runs, Google, right? So when the business are doing well, ad money pours into Google. In a recession, ads are one of the first things that companies cut, so Google sales rise and fall with border, economy when it's not steady. Second, it is a friend but also a threat for them. So Google owns Gemini, it keeps people inside the apps, but rivals like ChatGPT and are like trying to pull away from the search business. So far, Google is holding that line, but it is a fight to watch for a long run. Again, I do prefer Gemini over ChatGPT. Again, this is gonna be interesting to watch. Third is just regulators. Washington, the U.S. and the EU want more competition, which is fine. They can, you know, create fines or regulation, being forced to share their AI or whatever service they provide, or worst case, sell off pieces. So what could go wrong? So the high risk, antitrust. So it's a worst case, it's only on, Chrome or ads business. It is a slow burn to legal things. The medium one is AI eating the search business. They're pretty much, self-sabotaging themselves with the Google slash Gemini. But if people start using chatbots instead of Googling, that's also another ad business to shrink. But if they're doing like Google, but also Gemini search, that's totally fine. But if they're using like ChatGPT or Claude, that's gonna be slightly a problem. The other one, I suppose, is they're spending about 100 billion on AI this year. So if it doesn't turn a profit fast enough, investors won't like the result. Lastly, Waymo and friends, they might lose about 40 billion a year, and it could be huge someday or a steady drain. So that's something to look at when time comes. So what could the stock do? So three scenarios. The bull case is $470. Anti, assuming that antitrust stays the way it is, cloud and AI doing what it's supposed to do, and just being steady, being neutral is about 420. Steady growth, 15%, no breakup. Cloud, keep scaling the likely path. In the bear case, the worst case is they're forced to sell off ad tech or Chrome or AI that really disrupts their businesses. I really doubt the last one, but more so like 470 and 420. That's really something that makes more sense rather than the bear case. So the verdict, what I actually want to do again is 8 out of 10. It is a buy for me. Again, I already said my disclaimer. I do own Google shares, but again, not even one share. Again, it's just for fun in my meme account. So there's something I do, the stock that I really like. Again, do your own research. Don't just do what I say. Just do your own research before you make any financial decision. So what to watch? So next month they're gonna have earnings. So if their cloud business is still growing fast, it's something to look at. Antitrust. We can also look into that again. I really doubt anything's gonna happen. Gemini, are they actually still winning for business customers? Because I know it's mostly winning for personal, but are they actually winning for business sector? The bottom line, is a steady, powerful cash machine with real AI growth at a very fair price. And the lawsuits are part of the catch, but business underneath is one of the best on the market for most portfolio. It is a core and sleep at night holdings, in my opinion. Alright, thanks. That's pretty much it. Alright, thanks. Bye.